See, there's no need for me to introduce myself. Let's just jump right into what you're actually here for. So I'm very sure you guys add the word Forex, and that's why you're looking for a deeper meaning, or you want to understand what in general is Forex trading. Why are traders making money from this, from this source of wealth, and how are traders even able to make money from Forex? So first thing first, guys, we want to understand the word Forex, which is simply defined as foreign exchange, guys. So the shortened form of foreign exchange is what came about Forex. So for the foreign, while X for the exchange. So Forex is just simply the exchange of foreign currency, guys. Just like you exchanging naira to dollar. The same way you're exchanging dollar to Great Britain pound, the same way you're exchanging Great Britain pound to Japanese yen. So any exchange has to do with you changing your country's currency with another country's currency. Make sure it's not your country's same currency, like you're changing the same country's currency to another currency that's still in your country. No, it has to be from what another country's currency. Just like how we have naira right now, and then you go to the airport. Let's take for instance you are traveling to the United States. Then you have to change your naira to United States dollar. So that way, guys, you're simply participating in what you call foreign exchange. And also we have local exchange too. That's the exchange of currency in your local country. Just like how you have this thing, how you have naira, and previously there was also kobo in Nigeria. If you're exchanging your naira to kobo, that won't be foreign exchange, of course. That will be local exchange. And for United States dollar too, you have the cent, which is currently still in existence. So if you're changing the United States dollar to cents, it's called local exchange, not foreign exchange. Trust me, guys, when I say this is going to be the best beginners video by far on YouTube. So guys, to further explain this, now that we understand the exchange of currencies from Great Britain pounds to United States dollar, or from US dollar to even naira, guys, let's now see how we traders actually make money off this exchange. I mean, how do traders make thousands of dollars or thousands of naira out of this exchange? How does the forex even came about, and what are these numbers even all about? I'm sure you guys must have come across traders trading from 1.800 to 1.900. How did that number even come into place? All this is what we are going to be discussing on this drawing board. So now let's take for instance, guys, that we have this thing, that we have Great Britain pound and United States dollar. So we have GBP USD, which is the Great Britain pound versus the USD. So guys, we know that Great Britain pound is usually greater than the United States dollar. So most of the time, if $1 right here is equals like let's take for instance the pound is kind of like denoted with this number, is equals like 0.80 pounds. Usually this tells us that what the Great Britain pound is greater than the USD, which means that if we have 1 Great Britain pound, which is denoted by this 1 Great Britain pound, we'll be having about $1.20, or let's take for instance 15 cents. Since the Great Britain pound is higher than the dollar, if you have a small Great Britain pound, of course you'll be getting a larger dollar, and if you have 1 Great Britain pound, you'll be getting an higher dollar. So it's just as simple as that. Now this is how this number came into place, guys. If you're exchanging Great Britain pounds to United States dollar, we have stuff like this in our chart. We have 1.2000, we have 1.25000, we also have like 1.23000, and we have all of these numbers on our chart. And this tells us that if Great Britain pounds, if GBP is trading USD at this point. Now let's take for instance this, what I just wrote right here. If Great Britain pounds is trading USD at this point, and then the Great Britain pounds drop, if Great Britain pounds drop, which means dollar is going to be is going to be gaining more, and if USD drops, GBP is going to be gaining more. So now let's take for instance dollar dropped. If dollar drop, of course Great Britain pounds will definitely gain more, and then we have something like this. We have something like this, the GBP dropping, and then we may have consolidation, and this is just simply what comes brings the chart about, and this is how forex trader makes their money. So let's take for instance, now we've done our analysis and we kind of like saw that the prediction that GBP is like in a resistance area. So when price gets to this point, USD is going to likely drop to a particular point. Just as simple as that, guys. And also, guys, to give you guys another example, the same way we have GBP USD, we also have like GBP JPY. We have GBP JPY, we have gold and the like, plenty currencies and metals on our chart. So we have GBP JPY. Now for this case, GBP is super greater than Japanese yen, just because of the inflation and how strong Great Britain pound is. So most of the times, if Great Britain pound is trading for, let's take for instance 1 Great Britain pound, we will usually be having something like 118 or 120 great Japanese yen, just because of how just because I don't know what the symbol Japanese yen is denoted for, so I'm not going to put any symbol here. But if 1 pound is being exchanged to Japanese yen, guys, we'll be having something about 118 Japanese yen, which shows that our chart is going to have something like this, 118. Our GBP JPY chart is going to have 118.000 and the likes, and then you might have 119.000 at this bottom. You have 120.000 at this bottom. So definitely, if if Great Britain pound gains more, that means Japanese yen is going to, Japanese currency is going to depreciate. It's going to, deflation and the like is going to happen. So now let's take for instance, GBP was right at 118. A drop might likely happen, and then GBP might get to what, 120. So these drops, guys, might not happen straight sometimes. So this drop might just happen something like this. It might happen something like this. Don't worry, when we get to the chart, you guys will see clearly that this stuff don't just happen like that or just drop. But trust me, guys, this is what we traders trade. So at this point now, we might enter right from 118. We might take a sell right from 118, and at the same time, some people might even get in on sell right from 119. I might right to this point where we take our take profit in the market. And a reverse can also be the case. Sometimes the Japanese yen might also gain. So instead of Japanese yen to drop at this point, when Japanese yen gains, instead of this to drop, it's going to buy instead. So now let's take for instance, price also at this 120 right here, and then Japanese yen bought to this 118. The same way traders caught the sell, the same way traders can also catch the buy towards the upside, and then take profit right here. So this is just how we traders trade the market, and how we do our prediction, and how traders actually make money of the forex market. And to further explain this, guys, let's just quickly dive into our trading platform, which is the TradingView. Like I said, what we trade in the forex market, is the upward movement and the downward movement of what actually happened in the forex market. Just like I told you guys, price moving from 120, which was what I gave as an example on the board. But right here, you can see that GBP Great Britain pound is actually trading for 1 Great Britain pound is actually equals 191 Japanese yen, which means that over time, price have bought from that 120 to this 191 over the years, just due to inflation and the likes, and the increase in Great Britain pounds. So now that you have 191 right here, you guys can see that price didn't just get to 191. Price actually bought from like 118. Let's take for instance this one that we have right here, like this 189 that we have right here. You guys see that there was 189 right here. So boom, price bought from this 189 to this 191, and at the same time, price also sold from this 191 to this 189 to buy. So this is just what we traders actually trade in the forex market. So some traders might just take their buy right here, target this point right here. Trust me, that it doesn't just happen like this. So it has to do with a lot of analysis too as well, which are going to be going into in the other section. And some traders can also take their sell right here too, and also target this level. So things like this are actually what makes we forex traders money. Okay guys, now going into the next section of the video, which is type of analysis. So of course you guys want to know how we traders actually predict the upward or downward movement in the forex markets, because that's how we make money guys. We predicting that price is going to get to a particular level, price is going to either sell or either buy. So the ways that we actually predict there is by analyzing the market. And there are two major types of analysis in the forex market, which is the technical analysis and the fundamental analysis. Technical analysis is a very vital thing for traders. I mean, it's one of the most important, if not the most important thing that a forex trader actually does on the chart. So you guys see that a lot of traders pull lines, pull Fibonacci, pull different kind of stuff on their chart. All of these stuff are actually the process of technical analysis. And technical analysis is carried out when a trader goes back in time to check out what price have been doing previously. Just like I said, the price goes from 1.200 to 1.300. When price does that, price might stop at 1.200 or 1.300 and then reverse back. These are kind of the stuff we trader watch out for in the charts for us to predict what will actually happen in the future. Don't worry guys, I know me explaining this, you guys might not catch up real quick. So we are going to head down now to the drawing board to actually show you guys the types of technical analysis and how you can actually use them to become a profitable trader in the forex market. So I'm going to be teaching you guys the 4 major technical analysis you need to understand as a beginner. This is what is going to help you very well in your trading journey. So the first one we have guys is going to be support and resistance. So that let's just put tech analysis right here. So the first one guys is going to be support and resistance. Support and resistance. So most of the time, this is how support and resistance usually traded. So most of the time, let's take for instance, we have our chart right here. Most of the time, price, usually does something like this. Price goes up. Let's take for instance, price started at a particular position right here, and then price goes up, stops at a particular position, and then drops like this. Have a drop like this, have a drop like this, and then drop. This particular point now, it stopped dropping and started pulling up back. I started pulling up back. This previous point that price have dropped at at the highest point price got to when it was actually buying is going to be what is going to be our resistance level. So we are going to be denoting it by R. This is going to be your resistance level, and the target you are going to be getting for price to get to this resistance level before we are going to see another drop in the market. So this is how we trade support and resistance. Literally, after predicting that we've gotten our resistance right here, we're going to predict that when price gets to this resistance again, we are going to be shorting the market, which means we might take our entry somewhere right here. And then now going to the technical aspect, which has to do with our support again. So now price started at this bottom too also, and then price stopped at this position. So these previous points right here that price stopped at is going to be what is going to be your support. So the reason why we call this support is that when price is or something is pulling up, for it to continue pulling up, it's going to need support. Just like you have pillars when you are building a story building of like 3-story building or 2-story building. You have the pillar down. The pillar is not always up. The pillar is usually down to support the erection of the building. So that's why it's denoted by about support. And then when something is falling, if it throws something up, like let's take for instance, you have a ceiling. When you throw something up, the ceiling is going to be what is going to be the resistance, because once it touches the ceiling, of course that thing that you throw up is going to drop. So that's why we have this denoted by what? By resistance. So as you've gotten in on this resistance point again, the place you're going to predict that price is going to get to will be what? Will be the previous place price stopped when it was actually dropping, which is your support. So at a point in time again, after taking your entry, price might get to this point and then stop again. And then instead of you continuing that back, you might just get out and they would now predict that a buy is actually going to happen towards to probably this resistance again, and you might continue repeating the same thing all over again with what extra confirmations. And we're going to go into that after this aspect. That's why it's not that you just lay one series and then you believe that you've actually learned all. Like, trust me guys, forex is something that you're going to continuously learn for years. Even myself, I'm still in the stage of learning, so you guys have to be very, very patient. So now we've understand the concept of resistance, and we understand the concept of what to support. For that explain support and resistance, I'll be using this price action right here as an example. So now let's take for instance, we went back in time and price was right at this point, guys, right at this point. So there was none of all this stuff have initially happened. So as a beginner trader, you might not be able to draw all of these lines, and you might not actually even know how to even plot these our lines. So the easy way, and what I usually tell my students when plotting support and resistance, when you've actually marked out an high point, the highest point price I've gotten to, and the lowest point price I've gotten to, those are what your R and your S, which is the support and resistance. So there are 2 or 3 ways to actually mark out our support and resistance. You can use the whole week of the highest point or the lowest point to mark out this resistance. You can use the highest candle, the highest candlestick, all of the highest candlestick. And if you guys look close, if I zoom close, you guys will see that this stuff right here, this candlestick right here was actually the highest candle. So I can actually use this to plot your resistance or support level to, or you can use the whole consolidation movement at the resistance or support area. You can use all of these consolidation movements, but the ones I really pay attention to, the ones I actually recommend, is by using the highest wick. Yeah, use the whole body of the highest wick to plot these support and resistance levels in the forex market. So you can just extend this. We've gotten our resistance, and at the same time, this is the lowest point price I've gotten to. So I'll be using the whole week right here, as my support level. So I can also mark this right here. So most of the time, why I actually recommend you drawing a box instead of a line is that you are going to also implement this into your strategy, and it's going to give you a lot of room to predict whether price is actually going to do this or do that when trading support and resistance. So now that you've plotted this right here, our prediction is going to be that at a point in time, if price gets to this our resistance level, we'll be looking for a sell. And then also, if price gets to this our support in the future too, we also be looking for buy towards the upside. You see, it's a win-win this situation. When price gets up, you sell. When price gets down, you buy. So these are ways that we actually trade support and resistance in the forex market. Trust me, guys, I'm usually telling you guys, it's not as simple as it seems. So make sure you guys calm down and pay attention to these guys. So now let's fast forward to when price is actually going towards this resistance level. We are still patient, guys. Still wait for price to get to our resistance or support level. Any one of the two that happens, guys, take advantage of them. So boom, right here. So if you guys look closely, price will go to this level and then pull back out. So some traders might have taking advantage of this one right here. So when price pull back out, take advantage, and then target is going to be this previous resistance level. And let's see if price actually got there. Boom. So you guys see that, guys, price actually got to this resistance level. And at the same time, when price also got to this resistance level, you guys see that price got to this our zone right here and then pull back out. So at the same time, you can actually take advantage of these two. After price pull backs out, and then take our entry to target this new support area. The same thing will happen again continuously. When price get to this support again, you take your entry again. It's just basically as simple as that, guys. As simple as that. And you guys see that I didn't put my stop loss inside that box, guys. I put it above the previous resistance area. There is also one thing we need to actually pay attention to in the forex market. And at the end of the day, price have gotten to our support level back. Then we can start planning to buy again, and the same thing happens continuously and repeatedly in the forex market. I'm going to the second one, guys, which is going to be psychological levels. So I'm not really good in all these spelling and grammars of the likes. But now we're going to check what is psychological level. So we have our chart too also. And then price usually pulls up and down, pull up and down. Does something like this when it's buying and the like. So most of the time, you have all these numbers right here. You have, like, let's take for instance, you are trading GBP USD, then you have 1.2000, and then once price gets down, we have like 1 point, let's take for instance 2500, and then we have what, 1.3000. I know, guys, this stuff, this 25 or 30 is supposed to be on top, but I'm just using this as an example. This is psychological level. So most of the time, these round figures are usually some of the figures or some of the points that price get to and then stop. See that price went up right here and then stop at this particular point. So this particular point with round figures are simply what we call psychological levels, guys. There's no anything difficult about psychological levels. A point in time at which price stop at a particular round figure is what we know as what psychological level. So once price get to a particular round figure, you mark that out in your chart. That's why it's kind of like, see that I usually have lines sometimes in my chart. The lines are not always support and resistance lines. They can also be what, psychological levels. And the crazy thing about psychological level is that at the same time, psychological level might act as what, support sometimes, and might act as what, resistance too sometimes. So at this point too, price might get to this 1.3002 and then stop. So you see that what, this 1.330 now has now acted as what, your support, and then this 1.200 now has acted as what, our resistance. So you guys now see how these two, both psychological levels and support and resistance, are connected in the forex market. So I'm not going to waste much of your time on this. This is just the concept you need to understand about support and resistance and psychological level. Psychological levels are denoted by round figures. Round figures in first market, like let's take for instance now, this is DG. So we're going to be looking for round figures by adding 500 or 50 pips, guys. I'm not going into pips because it's not kind of like a necessary stuff right now. But pips are just what we use to calculate this whole movement in the market. So you can mark your psychological levels by adding 50 pips, which is what, let's take for instance 189 to what, 18500. And by adding 50 pips, you're going to know that if you mark this 189 psychological level, the next psychological level you're going to be marking is going to be 189,500, and then the next one is going to be what, 190, and like that. So these are the major levels you need to pay attention to. So you can be adding 50 or 100 pips, whichever you choose, guys. For me, just to not keep my chart clustered, guys, I usually go with the 100 pips, because all these 180, 188, 189, 190 are usually one of the major levels, the sweet spot for banks, and that's why we call them psychological levels in the market, levels that are likely going to be respected. So if you guys look close, you guys will see that previously price, let's take for instance, price bought right here, got to this 190 area right here, and then stopped, and then pull back down to this 188 psychological level as well. So you guys will just clearly notice that these psychological levels are big deals in the market, because most of the times these round figures are usually respected, same way it was respected right here too. And of course, trust me, if you go back in time, you guys will see that this right there was also respected. This psychological level 185 right here was also kind of respected. So sometimes price might not get to the psychological levels. It's not compulsory, but price usually get close to them sometimes. Price even, sometimes even weak out right here. So that's why you have, boxes around these areas, because 100% price cannot do 100% what you are predicting. So you might just draw a box around those areas that they have gotten to in the past, just to pay attention to them, guys. So all of these psychological levels, you guys can just plus them, mark them out on your chart. And at the end of the day, once you pay attention to these levels too, you can also take advantage of them. So the third most important technical analysis that a beginner trader needs to understand, guys, is Fibonacci retracement. So this is not, something like technical analysis. Fibonacci retracement is like more like a tool. So it's more like a retracement tool, because most times you guys see that I don't usually pull downtrend sometimes, and I don't usually pull up. Price might not just shoot up. Price might not just shoot up like this, and price might not just shoot down in the forex market. No, price usually does something like this when it's buying. So when price is buying, price kind of like does something like this, and when price is selling, so price usually does something like this, just like I have showed you guys in the chart. So when price does something like buy a little, pulls back down, buys a little, pulls back down, buys a little, there are usually opportunities for traders to buy. Of course, when a trader has identified that this market is getting from 0.1200 to like 0.1330, which means that is buying, the buying power is kind of like getting strong. So of course, a trader will be looking for opportunities to enter, and this is where our Fibonacci retracement tool come into place. And I'm definitely going to show you guys the tool on this chart to understand. So the Fibonacci retracement tool is just something that we pick from point A to point B, and then in the middle we have something like 0.50 right here. So traders usually exercise patience for this retracement to get what 0.50 before getting in on a buy. So we get in on a buy probably around this position and aim for a target, whether a target could be a previous resistance area, like I told you guys, a previous resistance area, or what, a previous psychological level, or where price have gotten to in past, and then you might just target that place. The same thing applies to when price is also selling too. So when price is selling, price might do something like this: sell a little, go up, sell a little, go up, and then what, we apply this Fibonacci retracement too. So once price, once you have gotten this point A right here, point A right here, and this point B right here, when we pull up our Fibonacci, our aim is going to be that what, our Fibonacci will get to 0.50, before we are going to enter for a sell. So it's just as simple as that. This is our Fibonacci retracement tool. Let's just for retrace, guys. I leave the English. Retracement tool is used in the forex market as a technical analysis. Okay, now heading into Fibonacci retracement tool, guys. So the first thing we want to do is understand the tool itself, understand the numbers that are on this tool and the like. So if you don't have this tool right there, all you just have to do is just go right here, go to the top, is it left or right now, left corner, and then just click this third one right here. And you guys see that there are a lot of tools right there. So the Fibonacci is actually the one you're interested in, and I've added it to my favorite because I use it a lot. So that's why it's right at this top left corner. So if I pull up this tool right now, you guys see that a lot of things are actually happening right here. Right? A lot of numbers are going on right here. So you have the 100, you have the 78.60, you have the 61.80, the 50, the 38.20, 23.60, and the 0%. So they are denoted by 0% and the other number. So you don't have to pay attention to all of this one right here, because this one right here is just telling you the particular positions that is right here. So if I shift it, see that if I shift it down, see that it's calculating with this number there. So don't pay attention to, don't let all this number at this top left corner disappoint you or kind of like distract you. So you can just go to the settings, you can turn those numbers off by just going to the settings, and you can also adjust your settings like this too, because sometimes you might not get all these numbers as default. So you guys can just take screenshots of my settings. So this is my settings for my Fibonacci retracement tool, and the coordinates, the style is even what is actually important. So this is, I use trend line and mark out all of this. So not to waste much of the time, you can just take screenshot of this or save it for later. Now going into how we can actually implement our tool. So like I told you guys, price don't just buy or don't just sell in the market. It does something like this, like this. So now this is how we use our Fibonacci tool when price does something like this in the market. We mark out what? We mark out our point A and then B right here. So if price is buying towards the upside, this is how we are going to plot our Fibonacci. We are going to pick our Fibonacci right from the top. Remember, it's buying right from the top towards to the bottom. Just as simple as that. And then when price gets to what these major three levels, these are the major three levels you're going to be paying attention to: the 61.80, the 50, and the 38.20 level. So these are the three major levels you are going to pay attention to. So once price gets to this level, that's when we are going to be activating probably a buy or a sell. At the same time too, if price is selling, let's take for instance price is selling, and then price retrace to this level. All we just have to do to again is just mark our point A and our point B. Now this time we'll not be pulling our Fibonacci right from the top, right? Because it's selling, we're pulling our Fibonacci right from the bottom to the top. Please make sure you guys are paying attention to these guys. For a buy trend, you want to pull your Fibonacci right from the top to the bottom. While if it's a sell, you want to pull your Fibonacci right from the bottom to the top. And then you pay attention to these three levels too as well: 38.50, 38.61, and these three levels. So this is where we actually plot. We're going to take a sell entry once price gets into that level and give you extra confirmation. So your first TP could be this level, this 100 level right here. And also another thing about Fibonacci too, it might also tell you places to put your TPs in the market. So those ones too are very necessary. But I usually advise my students to consider market structure first as their TP target before considering before considering the Fibonacci retracement extension. So these other figures right here are called extensions on our Fibonacci retracement tool. Now let's take for instance, now price is at this point right now. Now we are going to be identifying our point A and point B, which is the first important thing. So now let's take for instance, this low right here was in respect to this previous low. So you can just mark this as your point A. And then you know that you are looking for either a buy or sell, whether when the retracement give us, you can simply be going for a buy sell, considering this previous support level right here. This support level might be respected. So now we've marked our point A. Now let's see if price is going to give us point B. Okay, boom, right there. I think price just give us point B right now. So we can actually pull up our fib right now and just check if price is going to retrace a little before a buy is going to continue, since this buy momentum is picking up and this support area has kind of been respected. So for a buy, I told you guys that you have to put your fib right from the top to the bottom. So you pull it from point A to point B. And now our prediction is for price to get to this level, either the 60, 50, or the 38.20 zone. Or the 38.20 zone, yeah. So, but the major ones I want you guys to pay attention to is this 50 level right here. So this 50 level is actually my favorite level, but price can get to any one of these. And now when setting your stops in the market, you might want to consider either previous market structure, but you'll be getting a bad reach reward if you are considering this one. And if you're using the fib, you'll be considering 23.60 level. To put your stop loss. Some people also put their stop loss below this 38.22. Yeah, it also happens like that because they believe that if price breaks this 38.20, it might not actually be a retracement again. So whichever one you believe is best for you, whichever risk management plan is really best. But the one I usually pay attention to is 23.60. Sorry, and then my first tip will be at 100%. And then you might not want to consider previous market structures, like I told you guys, as your second or third or fourth TPs in the market. And if you guys notice, this extension kind of aligned with this market structure. So now our prediction is price gets to 50 level, and then we look for a buy. So let's see what price does at the end of the day. Okay, as you guys can see, price have gotten into our 50 level. So now prediction will be that price will get to this 100 level as your what? As your TP target, which is like a 1 to 2 weeks reward. Or what? Or this previous market structure level, or even your Fibonacci extension level. So let's see what price does at the end of the day. Well, guys, just as simple as that, guys. So with this Fibonacci retracement tool, you can catch moves as or retracements as simple as this. Markets are kind of like easier when you implement tools, and that's why all of these tools or technical analysis are there for you to make trading more easier for you. Now going to the third and final one, guys, which is what types of technical analysis or ways in which what we traders actually analyze the market to predict whether it's going to be buying or a sale is going to be happening is what. So the fourth one is going to be trend lines. So trend lines are also very important in the forex market, and this is how trend lines come into place. Just like I told you guys that price don't just shoot up and don't just shoot down. When we have something like this, hope you guys are seeing my stuff. When we have something like this, a buy is happening, a buy is happening, a buy is happening. So when you have something like this, guys, some of the time when price stop buying, something like this, something like a crazy sale usually happen when you stop buying. So this is how you can be able to catch that sale by using just our trend line. So by using just our trend line, guys, you connect what previous lows. This is how we use our trend line in the forex market. When price is buying, we usually connect what previous lows, and when price is selling, we usually connect what previous highs. So this is how trend lines are plotted. So we have something like this connecting what previous lows, which are denoted by higher low. If price is buying in the forex market, it usually creates higher highs and higher lows, and when price is selling, it usually creates lower lows and lower highs. Now what you guys will come to understanding all of these concepts. So you connect all the higher lows when price is selling, and this right here, this connection that we've made right here, is what we call our trend lines. Just as simple as that here, guys. So the line is drawn to connect previous higher highs or higher lows or lower highs is simply what we call trend lines in the forex market, and you can take advantage of this by what? Buying. So when price at a point in time comes back to touch this trade, some traders might just buy again and just continue following this trend, and sometimes price might also break the trend. So once price breaks this trend, some traders might even sell predict that a sale is going to happen to this point. So anyone that happens usually take advantage of them in the forex market. So like I previously told you guys, the connection of either higher highs, higher lows, or lower highs is what actually give us our trend. But for a buying state, guys, when price is buying the market, you want to be connecting what the higher lows, and when price is selling, you want to be connecting the lower highs. So for this point right now, you guys see that we have this illustration that I just previously gave. Price buying. So price is pulling towards the upside and forming new higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. So price doesn't do this all of the time, but when it does it, you can actually take advantage of this. That's why we have different types of technical analysis. So now all we want to do now is to connect what these previous lower lows, higher lows in the market. So we take advantage of this movement that when price comes back to touch this trend, of course, we look for buys. When price comes back to touch this trend, we look for buys. Just as simple as that, guys. So price is at this point right now. So if price should at a point in time come back to touch this our trend, we know that we'll be getting for a buy entry, guys. We'll be getting in for a buy entry. So another way you guys can act on this is that when price touch this trend, you wait for price to pull out of the trend instead of getting in on this point right here. You wait for price to pull back up before taking your entry. Not that we getting into this trend and then price can just price can break out sometimes, and then you might end up taking an L. So you also want to pay attention to that and watch out for that as well. So as you guys can see, price touch our trend and then what? Pull back up. So your target will always be what? The previous highest point that price have got into. The target will always be that previous highest point that what price have get into. So you might still want to be patient again because price might still come back and touch this trend, and then once it touches it again, wait for it to pull out, and then what, you take your entry again. So let's see if at the point in time price still what came back to actually touch our trend. So let's see what happens, guys. Okay. Yeah, so price didn't come back to touch this trend again. But now I want to show you guys a breakout. So once, as you guys can see, this is one of the major reasons why I told you guys that once price touch this trend, you want to wait for price to pull back up before you actually take your entry. So you know what, you don't get something like this and then you take an L. So this breakout too, we traders actually take advantage of this breakout. That what price breaks the trend, some actually go for sales in the market, but I'm not going to be diving deep into that topic today just because of we are beginners, we are learning the basics of the market, so we don't want to actually rush everything and just put everything in our brain, and so we'll not be confused at the end of the day. But right here, guys, is what have as what simple thing we have right here is what is a trend line, guys. And one reason why I would say this trend line is valid is that when this breakout happened, you guys will notice that what there was actually a drop when the breakout happened, which shows that this was actually a very, very good trend. So the market structure might be acting really poor right now, but I was still able to plot my trend line. And the more touches you have on your trend, the stronger your trend. Make sure you guys actually take note of these two. So we had like a 1, 2, 3, 4 touches, and that was what actually made our trend still very strong. So some people will actually catch this buy trade to this point, to this level, depending on your risk appetite or the like. So you can still catch the trade and still continue in the buy trend, but still, you have to actually consider taking profits in the forex market. And so far, many of us asking ourselves, what is this platform that this guy is using even called? How can I be using this platform to do my analysis, to my technical analysis? And I want to check it out, because we are interested in forex. I want to know this. So this platform is simply called TradingView, guys, and this is my personal account. So I can get access to this play and replay option just because I'm subscribed as a premium user. But trust me, guys, even as a beginner user or something like that, you don't have to actually subscribe to get all of these full options. In conclusion, guys, before I leave you guys on the drawing board, we have something we call strategies in the forex market. So you guys, after learning all of this now, major types of technical analysis we have in the forex market, the combination of what all these technical analyses are usually what we put together to form strategies in the forex market. So strategy is just simply defined by the combination of other technical analysis in the forex market. Like reversing or doing your back testing is actually what brings about a strategy that works for you, a profitable strategy that usually make you what money in the forex market. So combination of what probably a trend line and a support and resistance level is what is going to give you a stronger bias towards where market is going to head to. And sometimes you might have Fibonacci retracement, you might have breaks out like trend breakouts. You guys usually used to get trend breakout in the forex market. This is what we call a breakout. So when price is buying and you've pulled your trade, and when price just breaks this trend right here, this is what we call a trend breakout. So a trend breakout like this is a strategy on its own. So I know traders that only trade trend breakout. I know traders that only trade psychological levels. When price gets to psychological levels, they predict whether price is going to respect or what going to break that psychological level. And also support and resistance too. I know traders that only trade support and resistance, and I know traders also that trade the breakout of what support and resistance too. So sometimes price might break the support and resistance too. A lot of this happens in the forex market, and that's why I just want to quickly conclude that the combinations of all of these, usually technical analysis, is what brings strategy in the forex market. And that's why the more experienced a trader is, the more profitable strategy is going to come up with, because what he has studied the market very well. you are seeing that support and resistance have occurred a lot on this particular pair. And he has combinations of different strategy when price is in a particular point or is behaving in a certain way. So the second type of trading analysis, which is the fundamental analysis, just have to do with anything outside the chart, guys. Anything you going outside the chart to just go and look for other stuff. And mainly fundamental analysis has to do with news events, guys. News events relating to particular currencies. Now let's take for instance Naira. I'm in Nigeria, guys. Let's take for instance the president of Central Bank of Nigeria wants to announce that the dollar is about to drop. And you guys definitely know that when he announced that dollar is going to drop, a lot of momentum will actually happen in the market. And when the dollar is dropping, another currency like the United States dollar might be rising. So fundamental analysis is also used to predict the market, guys, but it's very risky. And I would definitely not recommend you using fundamental analysis to trade in the Forex market as a beginner. If you want to be trading with fundamental analysis, you have to have a lot of trading experience, because the volatility during these news events is very high and they can also be very unpredictable. So fundamental analysis, has to do with news events from governors, from central banks, anything that has to do with governmental policies and news in the Forex market is what we call fundamental analysis. Okay, guys, so at this point, I know many of us are like, okay, we've learned Forex like this, we want to start making money. Oh, yeah, let's start making money. Show us how to start making money. Trust me, guys, you don't want to rush into making money in the Forex market, because this takes months of learning. You want to fully understand all there is to know about Forex. And with the few I've mentioned, guys, you guys have just stepped up from being a beginner to an intermediate. Trust me, guys, this video is fully packed with a lot of knowledge, and that's why I'll recommend you guys to share. Now, going into some of the apps or some of the things you're going to be needing to initially start trading your real money, or if you want to start making money in the Forex market. So the first one I will recommend is your TradingView, which is the platform I use in doing all of my breakdown. So you can download this on either on your phone or on your PC, or you can even just go on the internet and just type tradingview.com, and you'll be able to do all of your analysis in the financial market. So that is the first I'll be recommending. And the second one I'll be recommending is for you to get a broker, guys. So the broker I personally use, not the one I'm even sponsored or something like that. The one I personally use is Vantage Market. And if you guys look closely, guys, you guys will see that this platform is actually very cool. And one of the major reasons why I choose Vantage is majorly because of how user friendly that platform is. The deposit and withdrawal option is super sweet. If you guys look closely right here, you guys see that I can easily just click deposit fund. You can deposit either through bank transfer, either using my card, or either using cryptocurrency. And the same way you deposit is the same way too you can also withdraw your funds. You choose the particular account you want to withdraw from, and then boom, you can withdraw through cryptocurrency or the likes. And the third platform I'll be recommending is where we are actually going to be doing the placing of the trade. We are actually going to be doing the placing of both the buy and the sell trade. So you just go on Play Store and download our MT4 and our MT5 app. So you can either use the MT4 or the MT5. The MT5 is just the advanced version of the MT4. Whichever one you prefer to use. There's no there's not like any crazy difference between the two of them. It's just that you're going to be having advanced trading options on the MT5 as to the MT4. So just type MT4 right here, which is the MetaTrader 4 and the MetaTrader 5. So you can just install that and install the MT5 too. So you're going to be connecting your account from your broker to your MetaTrader account, which is where you're going to be doing the trading of the live account or even the demo account. Right from your broker too, you can also demand for a demo account as well. All of these, guys, don't worry, all of these have been explained in my previous videos on YouTube. So that's why you guys should do well to check my channel out. I've been posting videos about Forex like this for months now. And I know you guys didn't even ask about my name, guys. So for most of you guys that are interested on my name, guys, I'm Deep Surface, guys, and do well to share this video. Share this video to anybody that is interested in learning Forex, and I believe that you guys must have picked one or two from these. And if you guys would love to see this face again, if you guys would love to see more content and more, informative stuff like this, make sure you subscribe to my YouTube channel. And I'll see you guys in the next one.